Hi guys, it's Stock Curry, and we've got a lot to go over today. I've got over 30 stock picks for you, plus cryptocurrencies. But before we get to any of that, we got to do a market update. It's really important because we have a huge shift coming to the markets. Now, first thing I want to do real fast is just give you guys a quick update on the channel. Over on the community tab, I have a poll where you can go vote for the 2 YouTubers that you want to replace. On this channel, we're replacing Trace Trades, and we're also replacing Richard Allen. So head on over to the community tab and vote for who you want to add to this channel. We're adding 2. Okay, before we get to the market update, I need to give you guys a quick economic update. Now, this is mainly for those of you who do not live in the United States, because we have a lot of international traders that like to trade U.S. stocks. Now, real quick, in the U.S. economy, what's happening? Well, first of all, about 55% of U.S. adults have now received at least 1 dose of the pandemic vaccine. So that's great news. People are getting vaccinated. It looks like we're going to start being able to open up. And in fact, that's actually happening. A lot of restrictions are starting to get lifted, such as mask restrictions, gathering restrictions, things like that. We know that Disney is reopening its parks, so things are starting to open back up. AMC has almost got all of its movie theaters open. You guys get the idea. So here in the United States, we have a lot of things that are starting to reopen, and it looks like it's going to be an incredible reopening. In fact, economists are saying this could be one of the best spending economies that we've had since 2018, 2019. I mean, they're thinking it's going to be incredible. In the United States, the U.S. savings accounts are at all-time highs. People have just been saving their money, and when things start to reopen, they're going to go spend it. So it looks great for the U.S. economy, and it looks great for any of our pandemic reopening plays. So what does that mean? Does that mean go out and run and buy a bunch of pandemic reopening plays? No, not at all. In fact, I'm going to give you guys the exact opposite advice. Now, that might sound crazy, but you've got to understand something. Stock market is a 6-month, typically 6-month forward-looking market, okay? So when we're looking at the stock market, we're trying to decide what to buy or sell. You got to understand, the pandemic reopening plays already ran up. A lot of those stocks are already trading above where they were before this whole shutdown started. So when it comes to that, I really want to stress to you guys, don't run out and buy a bunch of pandemic reopening plays. In fact, you might want to sell them and then move your money into other things. They already ran up. That ship has sailed. Wait, ship has sailed. Yeah, that's the phrase. Anyway, it's gone. So we need to do other things. So real quick, a market update. This is super important. There are major changes coming to the market. A couple of things. To go along with the economic update, the problem that we're running into is so much money has been printed. We are now seeing incredible inflation here in the United States. Gasoline prices are quickly approaching double what they used to be. Housing prices are through the roof. They are the entire housing market is insane. Basically, if you put a house on the market, you can pretty much expect people are going to bid anywhere from $10,000 to $100,000 above your asking price. The house might appraise for $100,000 less. People are like, I don't care. I'll just put cash down. It's so stupid. It's ridiculous. So housing prices are just rising way faster than we've ever seen before. Well, other than 2007, but yeah, you can draw whatever conclusions you want there. And in addition to that, there's just a ton. Interest rates are way down. And so people have just been spending. Well, all the money that's been printed, it's all leading to inflation, high inflation. So you want to think, the housing market already ran up, right? So that kind of takes away a lot of our housing plays. But gas prices are just now starting to run up. Not only are gas prices rising, but then on top of that, we're just now about to enter the summer where people are going to start traveling and demand for gas is going to go up. So energy plays, oil, gasoline, those kinds of plays are great stocks to be buying right now. The other thing is, think about what would do well during high inflation. Well, the answer is banking stocks. Why? Because banking stocks give out loans, and the higher the interest rate they can charge, the more money they're going to make. So banking stocks are great stocks to buy now. In fact, I am currently moving my portfolio into more energy focused, more banking focused, because I think that at least over the next 3 to 6 months, the banking stocks and the energy stocks are going to outperform the market. All right, those are the ones that I'm trying to move into. Now, I want to be real clear about something, because a lot of you guys are broke. I don't mean you don't have any money. I mean you don't have any money left to invest. You already put it all into the high growth stocks. Look, I'm right there with you. So what am I doing? I'm selling some of my lower conviction plays and I'm moving that money over into banking and energy stocks. I really recommend you guys think about doing the same thing. All right, we can't. You're just gonna have to sell some stocks at a loss. You just are. There's just no getting around it. Okay, we can't hold on forever. So your high conviction plays, hold them, hold them, hold them. Wait for them to go up, right? I'm not getting rid of SENS. I'm not getting rid of NNOX. Those are two of my highest conviction plays. They're not going anywhere. I'm not getting rid of CCIV, right? I'm not getting rid of these stocks. But I have other stocks that are low conviction that I'm going to start selling off and moving the money over, okay? If you guys follow me on Facebook and Twitter, on my Facebook and Twitter, I actually show you guys exactly what I buy sell within minutes of doing the trade. So go over to my Facebook and Twitter, follow me there. I have a link to those in the description of this video. Just head on down to the description. You'll find it there. You can follow me. And every single buy sell, you'll see it right there. The other thing is, eventually, this high rate of interest, this just exponential interest growth rate, is going to damper the economy. What'll end up happening eventually is things will just get so expensive that people will stop buying, right? So obviously with any sort of supply and demand right now, supply is really low. Well, in a lot of cases like housing, demand is you know, kind of low too, just because housing prices are so high. But interest rates are pushing demand up, so it's kind of this, you know, mix. But in a lot of other things, like oil, gas demand during the entire pandemic was really, really low. So the price goes down too. Well, now as we expect demand to go up, the prices start going up. What also means profits are going to go up. But eventually, what happens if prices go too high? What happens if, say, gas gets to $8 or $9 a gallon? Are people still going to be traveling? Are we still going to be heading out? No, of course not, right? People are going to stop traveling and they're going to cut back their expenses. So eventually, inflation is going to push prices up so high that people will sooner or later stop spending. Eventually, interest rates on things like houses and cars will get up so high that people will stop buying houses and cars, and then demand will settle back down. But for the time being, we can expect interest rates to rise. We can expect spending to just be crazy. But at some point, 6 months, 9 months, 12 months, at some point, I don't know. My guess is somewhere around October. The inflation is going to start pushing down demand. It's going to start pushing down spending. The economy is going to start getting hurt. I think with all of our Democrats in office, we have a ton of debt. We're going to have to raise taxes. There's just no way around it. So as taxes start going up, that's going to push assets down, and just everything combined, it's going to be really, really bad for the economy. It's just, you know, you got to do something. It's just, we're in a tough situation here in the United States. I don't know how else to say it. Inflation's going to go up, taxes are going to go up, and both of those stop spending, but at the same time, we want to encourage spending. So it's going to be tough, and I don't think it's going to work. And I think by the end of this year, things are going to start falling apart. So at some point, we may see a recession here in the United States. Whether that happens at the end of this year or in 2022 or 2023, I don't know. It all depends upon the policies and how long they can kind of delay things. But eventually it's going to happen. And when it does, we need to start looking at what stocks we can kind of start moving into to get ourselves prepared for that. And I got a hint for you. It's not high growth stocks. All right, that's your hint. But today, during our stock picks, I'm actually going to show you guys what some of those stocks are. Stockmo actually went through 5 of them today, and I was getting flashbacks back to 2007, 8, 9, because those were the exact same stocks. Like he and I saw, we are on the same page. We saw the exact same thing. The stocks that did well in 2007, 8, 9, probably the stocks are going to do extremely well in the next recession, whenever that does occur. So Just be aware of those changing shifts in the market. Nothing to get panicked about right now, but it is definitely time to start rebalancing those portfolios, moving out of some of the high growth stocks and moving into, I'd say, in the immediate time, maybe some banking stocks and some energy stocks, and then a little bit further down the road, some safer plays that might do well during a recession. So, all of that said, great market update. Let's get into the stock picks. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. I give you both the cliff notes from the top 10 YouTubers as well as my analysis on their stock picks. If any of the stocks I mentioned today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask in return for putting all of this together for you guys is that you hit that like button, subscribe, click the bell icon, and then click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. For those of you who are wondering, you are currently looking at the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $1,850, you can sign up for Webull using my link in the description below and deposit just $100. All right, let's get into today's stock picks. First up is ADAUSD. This is Cardano, and this is an altcoin that is starting to gain traction. Larry Jones sold all of his Bitcoin mining stocks and used 80% of the proceeds to buy ADA. Larry Jones gave a 1-year price target of $7 on ADA. I will also let you know that ADA is my best performing crypto right behind Dogecoin. Next up is BNBUSD. This is Binance Coin. Keenan Grace thinks BNB is going to double. It won't double overnight, but Keenan Grace said if you hold through all of the ups and downs, you will be rewarded. BNB is unique in that it is used as a base coin to swap out to other coins such as SafeMoon. For example, if you wanted to buy SafeMoon, you would first have to buy BNB and then convert that BNB into SafeMoon through PancakeSwap. But BNB is also traded by itself and has its own value. BNB can be purchased through Trust Wallet in the United States and through Binance everywhere else in the world. Keenan Grace recommends BNB as a long-term hold for at least 2 years. Next up is ETHUSD. This is Ethereum. Larry Jones sold all of his Bitcoin mining stocks and used a small portion of the proceeds to buy ETH. StockMo thinks ETH is the best crypto to buy in 2021, and ETH is StockMo's #1 crypto holding. Keenan Grace also likes ETH because on Tuesday, the European Investment Bank will be offering $121 million of debt on the Ethereum network, and Keenan Grace thinks that will be a big catalyst for ETH. Personally, I'm still waiting for ETH to pull back before buying in. I think it ran up too fast over the past week and a half. It's also overbought on the RSI, and the MACD is at its highest level it's ever been. I am hoping to buy ETH for around $2,000. Next up is AAPL. This is Apple. Keenan Grace said it's time to get some big dogs in your portfolio so you can stop dealing with the massive ups and downs in your portfolio. AAPL is up over 80% in the past year. This might be a big company, but it can still make you big profits. You already know AAPL had blowout quarterly earnings. But what we haven't discussed yet is the fact that AAPL authorized a $90 billion share buyback. When companies buy back shares, that lowers the number of shares on the market, which in turn causes the stock price to go up. Also, StockMo likes AAPL because even though they beat earnings, the stock price still dropped, which makes AAPL a great buy right now. Now, technically, AAPL has a history of bouncing off of the EMA levels, but which EMA level AAPL bounces off of is quite random. I do notice that AAPL likes to get down to around 40 on the RSI before bouncing. Also, it typically will have 1 to 2 weeks of red on the MACD before rebounding. So all signs actually point to AAPL continuing to drop in the near term. However, in about 1 to 2 weeks, AAPL should bottom out and start going back up. Once it does rebound, StockMo gave AAPL a $225 price target by the end of 2022. Next up is AHT. This is Ashford Hospitality. They run upscale hotels. Nobody specifically mentioned this stock today, although Smart Trader did briefly talk about it during his live video. I just wanted to bring this stock to you because quite a few people on Reddit and YouTube are starting to talk about it. Because this is in the hospitality industry, this is a pandemic reopening play. They've been beat down a lot lately. But just last week, the technicals turned bullish and people are starting to talk about this stock. Now, the financials remain terrible, with AHT reporting a massive $33 per share loss last year. They also have nearly $4 billion in debt, with only $92 million in cash. The good news is that this company does not have any short-term debt. All of their debt is long-term. But with only $92 million in cash and a loss of $633 million last year, this company is quickly approaching bankruptcy. So why are we even talking about this stock? Well, as you can see on the monthly chart, if AHT can survive, then this stock could be a massive recovery play. Just keep in mind that AHT was losing money and the stock price was dropping going all the way back to 2018, long before the pandemic started. Despite that, AHT appears to have bottomed out this year. So in short, I would rate AHT a very risky play that could double in price. If you decide to buy AHT, I would set a hard stop loss at $2.25. I would also sell once you're up 50 to 100%. Next up is ALL, Allstate. StockMo listed ALL as one of the best value stocks to buy now. After all, the insurance business never stops. The PE ratio was a lowly 7.26 as of Friday's closing price. Remember that a fair PE ratio is 15. The PE ratio is so low, StockMo said ALL was one of the best stocks altogether. Not only is this a value stock, it is also a growth stock and a dividend stock. Next up is AMC. This is AMC Movie Theaters. Zip Trader likes AMC as a short-term play. Specifically, he likes the fact that they are coming out with earnings on Thursday. Zip Trader looked at the fact that AMC has now opened most of their theaters, and he expects earnings to be good. Zip Trader thinks that over the next couple of quarters, as AMC gets more and more people back into its theaters, that AMC's stock price will rise along with rising revenues. Zip Trader is looking at AMC as a short-term play. He thinks good earnings, combined with the fact that AMC has been shorted so much, will either lead to a run-up going into earnings or a rise in price post-earnings, but he does expect a sell-off after that. Next up is ARDX. This is RBLX, their pharmaceutical company. Keen & Grace reviewed ARDX again on Friday after their FDA approval got delayed by 3 months. The stock dropped 13% on Friday after they announced that their FDA approval was delayed. Sure enough, this turned out to be a buy the hype, sell the news event, just like most news events. So Keen & Grace called this one perfectly. Keen & Grace had actually tweeted to sell at $9, which turned out to be the top. If you aren't following Keen & Grace, I highly recommend you go subscribe to his channel. Now, since the FDA approval was delayed by 3 months, that means you have another opportunity to buy the hype and sell the news. You might want to buy ARDX starting at the end of June and then sell at the end of July before the next approval date. Keen & Grace gave a buy-in price of $6.90 and an ideal buy-in price of $6.60. He also recommends setting your stop loss at about 5 to 10% below where you bought it at. Next up is BNGO. This is Bionanogenomics. Keen & Grace reminded us that BNGO got a deal with the UK National Health System to provide their Sapphire system to 2 labs. He also gave a buy-in price of $6, but I think BNGO has already been beat down and that it is a bit low. I will give you a buy-in price of $7, an ideal buy-in price of $5.50, and a stop-loss price of $5. Also, Keen & Grace recommends this as a long-term hold. Next up is Citigroup. StockMo listed C as one of the best value stocks to buy now. The PE ratio was only 9.56 as of Friday's closing price, so C would still have to rise 50% to get back to what is considered a fair price. And with interest rates rising, C could outperform in the future. I put a limit buy order in on C at $70.88. I'm hoping C bounces off of the 50-day EMA on Monday so that I can buy the dip. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. The merger is supposed to happen sometime between May and June of this year. I was going to discuss CCIV during my live stream on Friday, and then I got distracted and forgot all about it. so sorry about that. But let's cover it now. First of all, I only recommend CCIV as a long-term hold. The stock price probably won't start moving until Lucid Motors starts to deliver vehicles towards the end of this year. Currently, CCIV remains heavily shorted and under constant short seller attacks, including lawsuits. The lawsuits probably won't go anywhere. After all, pretty much every single SPAC has at least one lawsuit against them. But still, that's just one more thing keeping the price down. The nominal value of CCIV based upon the value at the time the merger was announced is $20. So anything under $20 remains a great buy-in price. Just be patient with CCIV and don't expect any big price movements for another 3 to 6 months. Keen and Grace also showed us that large institutions are buying CCIV whenever it drops below $20. Next up is CLII. This is a SPAC and they're merging with EVgo. EVgo is the largest network of fast charging stations in the United States. They have partnered with GM for massive expansion over the next 5 years. Larry Jones said he is buying more CLII. He likes where the price is at now. Next up is COIN. This is Coinbase. This is a platform that is used to trade cryptocurrencies. StockMo listed COIN as one of the best stocks to buy this year. But he's not specifically looking at COIN. He's more so looking at cryptos in general. Specifically looking at COIN though, we're still waiting for a bottom to be reached. I personally still think COIN is a decent buy under $300, but I do not have any plans to invest in COIN at this time. I still think competition is going to push Coinbase to the back burner as discount and free exchanges come online. That's why I personally chose to purchase my crypto through Crypto.com, because you can buy crypto for free for your first 30 days, and then the fees are minimal after that. They also have Dogecoin, which Coinbase does not offer. If you're interested in buying crypto through Crypto.com, you can use my link on the promotions page to sign up and get $25 in free crypto. I have a link to my promotions page in the description of this video. Next up is COST. This is Costco, and StockMo listed COST as one of the best stocks to buy to help prepare for a stock market crash. The reason is because during the 2007 to 2009 recession, we saw people doing anything they could to save money. And for many people, that meant buying in bulk at places like Costco. However, this time around, I'm not so certain that COST would perform as well during another market correction. The reason is because I've been reading some articles on changing shopping habits amongst millennials, and millennials are shopping at places like Costco less and less. Part of the reason is because they are waiting to start families, which means they don't need as much groceries, and another is because they are waiting to buy houses, which means they don't have a lot of room to store bulk groceries. Next up is CPSH. This is CPS Technologies. They are a composite metal manufacturer used in naval ships and space vehicles. It's been a few months since we talked about CPSH, so let's review it now. Dead Inside uploaded a video on Friday discussing this company and the stock. If you are holding CPSH, I would strongly recommend you go watch Dead Inside's video that he uploaded on Friday. In short, Dead Inside said that nothing has changed with the company. The only thing that has changed is the stock price. The large Navy order that they announced at the beginning of February, which pushed CPSH all the way up to $30, won't show up in the revenue numbers until Q2. Their earnings report on Thursday was for Q1. Now on the chart, CPSH is close to oversold on the RSI. Also, the MACD finally turned bullish for the first time since February 22nd. Remember that the MACD can be an early indicator of a rebound on a stock. The fact that the price is right at the level it was before the Navy contract was announced means this stock is cheap right now. I did place a small limit buy order at $7.63 on CPSH. I personally do not have high conviction on this company, but I do think the stock is ripe for a rebound. Next up is CRWD. This is CrowdStrike. This is a cybersecurity company used by banks and other large companies to help cybersecurity professionals manage threats. StockMo listed CRWD as one of the best stocks to buy in 2021. StockMo thinks CRWD has a 20 to 30% upside potential over the next 12 months. I would just warn you that the MACD is about to turn bearish, the RSI is dropping, and the candles are dropping, so I do expect CRWD to continue to drop, definitely down to the 100-day EMA and possibly even down to the 200-day EMA. So I would just be patient and wait for a bottom before buying in. Next up is CTRM. This is Castor Maritime. They are a commercial shipping company. Keen and Grace said now is the time to buy back into CTRM. The reason is because CTRM tripled their fleet size this year after going on a $98 million secondhand spending splurge. They are also very close to profitability, with their last 3 quarters coming in at -1 cent, 0, and -1 cent earnings per share. Now in the short term, CTRM is bearish, with the candles dropping, the RSI dropping, and the MACD histogram dropping. CTRM has support at 43 cents, so it will be crucial for us to see if CTRM bounces off of that support line or if it breaks through and continues dropping. Therefore, Keen and Grace gave a buy enter price of 45 cents on CTRM and said to make sure you put a stop loss on it. I agree with that, and I would add that I think a good stop loss price would be 42 cents. If it does drop below that, then the next support levels I see are 33 cents and 28 cents. So if you do get stopped out at 42 cents, I would try to buy back in under 36 cents with a 27 cent stop loss price. Next up is GM. This is General Motors. They're an American vehicle manufacturer getting into EVs. Larry Jones said GM is the only car company that he is currently adding money to. GM will be a 100% EV company by 2035, and they already have the global infrastructure in place to grow their EV sales quickly. That makes GM a great EV company to invest in long term. Next up is GS, Goldman Sachs. StockMo listed GS as one of the best value stocks to buy now. The PE ratio was only 8.67 as of Friday's closing price. As a banking stock, GS should do well with the rising interest rates. StockMo said GS is a leader in the banking industry, and he expects them to continue to do well and outperform. GS is also one of my favorite banking stocks. If you are looking to open a position, I would wait a few days though, because the MACD is showing early signs of a small dip, and GS has a history of bouncing off of the 50-day MA. So I do think you could buy GS for around $340 if you are patient. Next up is LMT. This is Lockheed Martin. StockMo listed LMT as one of the best value stocks to buy now. The PE is higher than StockMo's other value stocks at 15.24. Now, to be fair, StockMo bought LMT at the low in February, and LMT has risen 17% since then. But StockMo still thinks LMT will continue to grow revenue, and he thinks LMT sales will pick up once the economy reopens. Next up are MARA, RIOT, and SOS. MARA is Marathon Digital Holdings. All 3 of these stocks are Bitcoin miners. Larry Jones sold all of his Bitcoin mining stocks last week. That includes MARA, RIOT, and others. The only one he is still holding is SOS. Larry Jones wanted to be clear that he does not see imminent danger for Bitcoin mining stocks. Larry Jones is looking at the future growth potential for these stocks, and he feels his money would be better invested elsewhere. One of the reasons Larry Jones sees a slowdown in the growth of Bitcoin mining stocks is because environmentalists may be against Bitcoin mining. There have been numerous news reports lately complaining that the amount of electricity it takes to mine cryptocurrencies exceeds the value of those cryptocurrencies. The reason Larry Jones chose to keep SOS is because they have low electricity costs, and the stock has been beat down a ton lately on short seller reports. Larry Jones sees SOS as a recovery play. Next up is MCD. This is McDonald's. StockMo listed MCD as one of the best stocks to buy to help prepare for a stock market crash. StockMo and myself both remember MCD performing well during the 2007 to 2009 market crash. StockMo and myself both remember MCD performing well during the 2007 to 2009 market crash. The reason is because when people are struggling, they tend to eat cheap food, and that is exactly what MCD offers. Next up is MSFT. This is Microsoft. Keen and Grace likes MSFT as a long-term growth stock to help balance out your portfolio. MSFT recently cut their online store fees for game developers from 30% down to 12%, undercutting Apple's drop in fees from 30% down to 15%. Now, MSFT has a history of bouncing off of the 100-day EMA. The 100-day EMA closed Friday at $236.89. So I'm going to give you a buy-ender price of $245, an ideal buy-in price of $240, and a stop-loss price of $230. Next up is NIO. This is NIO, and they're a Chinese EV manufacturer. ZipTrader went into a more detailed analysis of NIO on Friday, and he also gave his price prediction. In short, ZipTrader went over how NIO's stock price drops in half every time something comes up and their delivery numbers fall. This is the first time, though, that NIO's delivery numbers are stagnant due to no fault of their own. As soon as the semiconductor chip shortage is fixed, NIO's delivery numbers will go up, and along with it, the NIO share price should go up too. ZipTrader said NIO could double in price. Also, StockMo is looking forward to NIO's eventual expansion into the United States. We already know NIO is hiring in the United States, so it's just a matter of time before that happens. And before NIO comes to the United States, they will be expanding into Norway and Europe. NIO will hold a press conference on Thursday, May 6th to officially announce their plans to enter Norway. And Keenan Grace thinks NIO might expand into Germany after Norway before they start focusing on the United States. Next up is NXST. This is Nexstar Media Group. StockMo listed NXST as one of the best value stocks to buy now. NXST had a PE of only 8.44 as of Friday's closing price. Both revenue and earnings continue to increase every quarter, and that is why StockMo thinks NXST could double, and I agree. Next up is OCGN. This is OCGN. They're a genomics company with a goal of curing blindness and is also 50% owner in a company that is developing the world's first traditional inactivated virus pandemic vaccine. Chris Zane mentioned OCGN on Sunday, but did not specify how to play it. He said that if you think it already ran up too much, you should buy a put, and if you think it still has room to run, you should buy a call. Now, I don't like either one of those plays, unless you are specifically day trading. You have a lot of things working against you when you only go long on a call or put, including theta, which is time decay, and vega, which is the cost of volatility. And with OCGN's options running at over 200% implied volatility, you are far better off selling options than buying them. If you want to know more about why buying single leg options is a bad idea, you should go watch the Traveling Trader's video that he uploaded Friday called Why You Should Never Buy Call Options. Next up is PLTR. This is Palantir. They're a data analytics company. Chris Zane said that out of all of his plays, he feels the strongest about the success of PLTR. Chris Zane gave a buy-enter price of $23.50 with an ideal buying price of $22. PLTR continues to consolidate in this narrow channel, and I see no technical signs of PLTR breaking out anytime soon. I will reiterate my buy-enter price of $25, my ideal buy-in price of $21, and my stop-loss price of $20. Next up is RBLX. This is Roblox. They're an online gaming platform. StockMo listed RBLX as one of the best stocks to buy in 2021. The stock is up about 7% from its IPO and is performing fairly well. StockMo thinks RBLX will do well for generations to come. Next up is TSLA. This is Tesla. They're an American EV manufacturer. StockMo listed TSLA as one of the best stocks to buy for 2021. TSLA is still down about 20% from its high. StockMo said that with the EV market exploding, he does see big things happening for TSLA moving forward. He also likes the fact that large institutions have started to buy TSLA again. Next up is UBER and LYFT. This is Uber and Lyft, and they are ride-sharing companies. ZipTrader said that UBER and LYFT were beat down last week on news that U.S. officials and lawmakers, including the U.S. Labor Secretary, are pushing to classify gig workers as employees. Now, what's interesting is that this actually failed in California, which is one of the most liberal states in the country. So the odds of this passing on a national level are slim. And with earnings coming up, ZipTrader expects a recovery and pre-anticipatory run-up going into earnings. Next up is WMT. This is Walmart. StockMo listed WMT as one of the best stocks to buy to help prepare for a stock market crash. During a recession, people tend to shop at places that offer cheaper goods, and Walmart is the low-price leader in the retail space. Finally, we have Zillow. They are an online real estate company. ZipTrader thinks that as the summer comes and people start buying and selling more houses, that Zillow will benefit from that. Home prices might be at record highs, but mortgage interest rates are at record lows, so the buying continues. And as home buying heats up over the summer, ZipTrader expects great earnings from Zillow. Z is reporting earnings on Tuesday. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you want to get some free stocks, sign up for Webull using my link in the description below. When you sign up and deposit just $100, Webull's going to send you 2 free stocks worth up to $1,850. They're also going to give me 1 free stock, so it helps you out and it also helps the channel out. Finally, remember to hit that like button, subscribe, and click the bell icon if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.